Have you heard about stocks lately and been asking yourself, what are stocks? How do they work? Are they any different than shares? And can I make money with these stocks? Hey, welcome to Rynance. Today we are going to cover the basics of stocks. We'll answer all these questions and more in this video. Let's start simple and answer the question, what are stocks? Simply put, stocks are a piece of ownership in a publicly traded company that anybody can buy. People who buy into the company are known as shareholders and are entitled to a certain amount of the company's profits. Stocks also have other perks like receiving dividends, which are cash payments from that company, and voting rights to determine who runs the company. Exactly how much a shareholder gets depends on how much of the company the shareholder owns. If you were to buy 1% of a company's stock, you would own 1% of that company. You'd be entitled to 1% of the company's profits and have a 1% say in who runs the company. Just like if you were to cut a pie into 100 pieces and give one piece to 100 different friends, each person would own 1% of that pie. So given that a company is selling off ownership in the form of stocks, why would a company do this? Well, this is just like how the TV show Shark Tank works. In the show, entrepreneurs are selling a portion of their business to the sharks in order to gain additional funding for their business. They give up some percentage of ownership and control in their company in exchange for money to grow their business. We can use Elon Musk's decision to take Tesla public as an example of this. Tesla went public and first sold shares on the stock market in June 2010. They sold a total of 12 million shares in the company that raised $200 million for Tesla. This allowed Tesla to fund their business expansion in a multitude of ways, including increasing their manufacturing capability, developing new cars such as the Model S, and creating their autonomous driving system. At the time, there were a total of 100 million shares in Tesla, so the 12 million shares they sold to the public meant that Tesla had given up a 12% ownership in their company in exchange for the $200 million. You might be thinking to yourself now, okay, that's great, that's how the rich get richer. But how can I make money doing this? Okay, let's say you decided to buy one share of Tesla in November 2019 when Elon announced the Cybertruck. At that time, you would have paid $66 for one share of Tesla. Now let's fast forward a year and a half to today, March 2021, in which Tesla shares are selling for approximately $650. You would have made a $584 gain on your investment, which is 885%, or almost 9 times your money. This is fantastic. Exactly why this happened is due to a number of different factors, but generally speaking, the reason why you made money on your investment is because Tesla as a company is growing over time. They are producing and selling more cars, reducing their costs to make the cars, building more factories, and gaining some ground in the car market against competitors such as Ford and Toyota. These are good things. We should keep in mind, though, that things are not always sunny in stock market land. If you bought that Tesla share and Tesla ended up struggling to produce and sell cars, it would be a much different story. The stock price would have declined and you would have lost money. Remember that yes, stocks sometimes go up, but they also sometimes go down. It's not just as easy as buy stock, get money. So finally, where can you go to buy stocks and get involved? You can only buy and sell stocks through a broker. Let me explain how this works quickly. Public companies list their shares on what are called stock exchanges. This is where people can go to buy and sell stocks to one another. Here, you can buy shares in many of the most well-known companies in the world, including Amazon, Walmart, Starbucks, and many more. When you want to buy a stock, you are actually buying them from somebody else who is selling stocks. So naturally, we need a way to connect you, the investor, to the stock exchange. This is where the brokers come in. A broker connects you to all the other buyers and sellers in the stock exchange so they can match up your buy order with somebody else's sell order. In the case of Tesla, you want to buy a share, right? So the broker will find you somebody that is willing to sell you a share. There are many different brokerages around the world, and each country has different brokers that you can work with. Some popular brokers in the US are Robinhood, who are now famous because of their GameStop situation. But there are many other brokers such as TD Ameritrade, Charles Schwab, and Fidelity Investments. I would suggest you look into different brokerages in your specific region to gather some more information about which one you should go with. Thanks for watching today. Check out some of my other stock markets basics videos in the playlist on screen now. Have a question that I didn't answer? Drop me a comment and I'd be more than happy to help. If you learned something new, leave me a like, and as always, subscribe for more content. I'll see you in the next one. Bye.